What if I told you that with just $100,000, you could own property in one of the world's most luxurious cities, a place where there's no income tax, no property tax, and where millionaires from around the globe are flocking to invest? Today, I'm breaking down everything you need to know about Dubai real estate in 2025, and I guarantee some of these numbers will shock you. But before we dive in, stick around until the end because I'm going to reveal the 3 biggest mistakes that cost investors millions in Dubai and how you can avoid them. Trust me, mistake number 3 will surprise you. Welcome back to Real Estate World. If you're new here, we help people navigate international real estate markets. Dubai has become the new hotspot for global investors, and for good reason. The city offers incredible opportunities, but it's also full of traps for the uninformed. Today we're covering everything from what your budget can actually buy to the areas that are absolute gold mines versus those you should avoid at all costs. First, let's talk about why Dubai is attracting so much attention. The UAE offers a tax-friendly environment that's hard to find anywhere else in the world. We're talking 0 personal income tax, 0 capital gains tax on real estate, and 0 inheritance tax. This alone makes Dubai incredibly attractive for high net worth individuals. But it's not just about taxes. Dubai's strategic location makes it the perfect bridge between East and West. The city has world-class infrastructure, political stability, and a growing economy that's diversifying beyond oil. The government has also introduced long-term visa programs, including the Golden Visa, which grants 10-year residency to property investors. The real estate market itself has matured significantly. Gone are the days of the 2008 crash. Today, we're seeing steady growth, increased regulation, and a focus on sustainable development. The market has become more transparent, and buyer protections have improved dramatically. Now, let's get to the numbers everyone's curious about. What can $100,000 actually buy you in Dubai? With $100,000, you're looking at several options. In emerging areas like Dubai South or Dubai Investment Park, you might find a studio apartment or a small one-bedroom unit. These areas are developing rapidly due to their proximity to Al Maktoum International Airport and new infrastructure projects. In more established areas like International City or Discovery Gardens, $100,000 could get you a one-bedroom apartment, though you'll want to factor in service charges and maintenance fees, which can range from $500 to $1,500 annually. Here's something interesting. Dubai also offers off-plan properties with flexible payment plans. With $100,000, you could potentially secure a larger unit in a developing area by paying in installments over 5 years. This is particularly attractive in areas like Mohammed bin Rashid City or Dubai Hills Estate. But here's the reality check. While $100,000 can get you into the market, you'll need to be strategic about location and timing. The days of buying prime property in downtown Dubai or Dubai Marina for this budget are long gone. If you're planning to live in Dubai, location is everything. Let me break down the best areas based on lifestyle and budget. For families, Dubai Hills Estate and Arabian Ranches are fantastic options. These communities offer villas with gardens, top-rated schools, and family-friendly amenities. The infrastructure is excellent, and you're getting great value for money. Young professionals gravitate toward Dubai Marina and JBR. Yes, it's pricier, but the lifestyle is unmatched. You've got beaches, restaurants, nightlife, and excellent public transport connections. The rental yields here are also strong, typically 6 to 8% annually. For a more authentic experience, consider Jumeirah or Suqaim. These areas offer a blend of traditional and modern Dubai, with beautiful beaches and proximity to major attractions. Business Bay is perfect if you work in the financial district. It's centrally located, well-connected, and offers a good mix of residential and commercial properties. The area has transformed dramatically over the past few years. Now, if you're purely looking at investment potential, the game changes completely. Dubai South is the crown jewel of emerging markets. With Expo 2020's legacy projects and the expansion of Al Maktoum International Airport, this area is positioned for massive growth. Property prices are still relatively low, but the potential is enormous. Mohammed bin Rashid City, or MBR City, is another hotspot. It's the largest mixed-use development in the region, featuring the world's largest man-made lagoon. The area is still developing, which means entry prices are reasonable with high upside potential. For those with bigger budgets, downtown Dubai remains a safe bet. Properties here hold their value well and offer consistent rental income. The area is fully developed with iconic landmarks like the Burj Khalifa and Dubai Mall. Dubai Hills Estate is perfect for the mid-range investor. It offers a good balance of current rental yields and future appreciation potential. The area attracts both families and young professionals, ensuring steady demand. Not all areas in Dubai are created equal, and some can be real money traps. International City is often marketed to budget-conscious buyers, but be cautious. While properties are cheap, the area suffers from oversupply, poor build quality in some developments, and limited resale potential. The rental yields might look attractive on paper, but vacancy rates can be high. Some older developments in Deira and Bur Dubai might seem like bargains, but many have significant maintenance issues and limited growth potential. The infrastructure in these areas hasn't kept pace with newer developments. Be wary of any area that seems too good to be true in terms of pricing. Often, these locations suffer from poor connectivity, limited amenities, or oversupply issues that will hurt your investment in the long run. Now, here are those 3 critical mistakes I promised to reveal. Mistake number 1, not understanding the service charges and maintenance fees. Many investors focus only on the purchase price and forget about ongoing costs. These can range from 10 to 25 dirhams per square foot annually, significantly impacting your returns. Mistake number 2, buying off-plan without proper due diligence. While off-plan can offer great value, you need to research the developer's track record, financial stability, and delivery history. Some developers have had delays or quality issues that cost investors dearly. And mistake number 3, this one surprises everyone, not considering the community's long-term viability. Many investors buy based on current prices without researching planned developments, infrastructure projects, or community management. A beautiful property in a poorly managed community will struggle to appreciate in value. Bonus mistake: not understanding the legal requirements. Foreign ownership is allowed in designated freehold areas, but buying in leasehold areas can create complications. Always work with qualified legal counsel. Dubai's real estate market offers incredible opportunities, but success requires knowledge, strategy, and patience. Whether you're looking to invest $100,000 or $1 million, the key is understanding the market dynamics and choosing the right location for your goals. Remember, real estate is a long-term game. Focus on areas with strong fundamentals, good infrastructure, government backing, and sustainable demand. If this video helped you understand Dubai's real estate market better, please give it a thumbs up. It really helps the channel grow. Drop a comment below and let us know which area of Dubai interests you most, or if you have any specific questions about investing there. And if you want to stay updated on international real estate opportunities and investment strategies, make sure to subscribe and hit that notification bell. We post new content every week to help you make smarter property investment decisions. Thanks for watching, and I'll see you in the next video.